Oh, it's 10:21 a.m. Pacific Daylight Time. It's the first day of October 2025, and this is your episode 1180 of Bitcoin and Turn the Dime Again. Ladies and gentlemen, we've got a Chinese woman who's been convicted after the world's biggest Bitcoin seizure. Kind of makes me wonder, is it a grand mal seizure? Is it some kind of epileptic seizure? What kind of seizure are we talking about? Of course, I jest. We also have, well, there's a problem with the French Central Bank, and Arthur Hayes is going to sort of tell us all about it. Yes, sir, ladies and gentlemen, this is where you get all your Bitcoin news that you can use, and more, by the way, because we have more. Pavel Durov tells us how he's been living. Well, specifically, like on what he's been living. So there's that. And it's kind of surprising, but kind of not. Coinbase has topped $1 billion in Bitcoin-backed loans. Yeah, what could possibly go wrong? Wisconsin passes a pro-crypto law. We'll talk about it. And the SEC chair, well, is very vague. Very, very vague on the rules for wallets. BlackRock is in the news. Kentucky is in the news. And the Knights Templar are in the news. Well, no, not the Knights Templar, but Templar. Well, more Bitcoin lending. Again, what can possibly go wrong? Well, we hope that it's not like this. Chinese woman convicted after world's biggest Bitcoin seizure. Osmond Chia from the BBC, a Chinese national, has been convicted following an international fraud investigation which resulted in what's believed to be the single largest cryptocurrency seizure in the world. The Metropolitan Police, oh my God, that means they're going to sell it all immediately because Britain is lost and they don't know how to do the simplest things like, oh, I don't know, not spend money. The Metropolitan Police says that it recovered 61,000 Bitcoin worth more than 5 billion pounds sterling or $6.7 billion US in current prices. Zimin Quan, I best pronunciation I can do, also known as Yadi Zhang, we'll use that one, pled guilty on Monday at Southwark Crown Court of illegally acquiring and possessing the cryptocurrency. A second person appeared in court on Tuesday to admit their own role in the scheme. Malaysian national Seng Hock Ling of Matlock, Derbyshire, pleaded guilty at Southwark Crown Court of entering into a money laundering arrangement on or before 23rd April 2024. According to the charge, he had been dealing in cryptocurrency on Quan's behalf, quote, knowing or suspecting his actions would facilitate the acquisition or control of criminal property by another. Between 2014 and 2017, Quan led a large-scale scam in China, which involved cheating more than 128,000 victims and storing the stolen funds in Bitcoin assets, the Metropolitan Police said in a statement. It said the 47-year-old's guilty plea followed a 7-year probe into a global money laundering web, which began when it got a tip-off about the transfer of criminal assets. Quan had been, quote, evading justice for 5 years up to her arrest, which required a complex investigation involving multiple jurisdictions, said Detective Sergeant Isabella Grotto, who led the investigation. She fled China using false documents and entered the UK, where she attempted to launder the stolen money by buying property, said the Met. Quote, by pleading guilty today, Mrs. Zhang, or Quan, whatever, they keep changing the name, hopes to bring some comfort to investigators who have been waiting since 2017 for compensation, and to reassure them that the significant rise in cryptocurrency value means there are more than sufficient funds available to repay their losses said Kwan's solicitor Roger Sahota of Berkeley Square Solicitors. On Tuesday, the court heard that confiscation proceedings had begun in an effort to retrieve more than 16.2 million pounds from Ling, with the figure to be adjusted to reflect cryptocurrency rates when he is sentenced in November. Some reports have suggested the UK government will seek to retain the seized funds. The BBC has approached the Treasury and Home Office for a response. Reforms to crime legislation under the previous Conservative government aimed to make it easier for the UK authorities to seize, freeze, and recover crypto assets. The change would also allow some victims to apply for the release of their assets held in the accounts. The goddess of wealth. Well, Kwan had help from a Chinese takeaway worker named Jian Wen, who was jailed for 6 years and 8 months last year for her part in the criminal operation. Wen, 44, laundered the proceeds from the scam and moved from living above a restaurant to a multi-million pound rented house in North London, said the Crown Prosecution Service. She also bought 2 properties in Dubai worth more than 500,000 pounds sterling. The Met said that it seized more than 300 million pounds sterling worth of Bitcoin from Wen. Chinese media outlook Lifeweek reported in 2024 that investors, mostly between the ages of 50 and 75 years old, had poured hundreds of thousands to tens of millions of Chinese yuan into investments promoted by Kwan. Some of the victims, including business people, bank employees, and members of the judiciary, were reportedly urged to invest with Kwan's scheme by family and friends. The investors reportedly knew little about Kwan, who is described as, quote, the goddess of wealth. Wealth. Bitcoin and other cryptocurrencies are increasingly being used by organized criminals to disguise and transfer assets so that fraudsters may enjoy the benefits of their criminal conduct, said Chief Deputy Crown Prosecutor Robin Whale. This case, involving the largest cryptocurrency seizure in the United Kingdom, illustrates the scale of criminal proceeds available to those fraudsters. Monday's conviction marks the culmination of years of dedicated investigation, which has involved the police and Chinese law enforcement teams, said Will Lin, the Met's head of Economic and Cybercrime Command. Kwan is being held in custody ahead of sentencing, which will take place on the 10th of November as part of a 2-day sentencing hearing at which Sang Hock Ling has also been asked to appear. UK Secretary Minister Dan Jarvis said the conviction sent a clear signal that the UK was not a safe haven for criminals. Pausing. Are you sure? Have you looked at the UK lately? It looks like it's a pretty safe haven for criminals right now. But, that's not politically correct, so we'll move on. Quote, money laundering erodes trust, undermines our economy, and fuels the rise of serious organized crime. Yeah, nothing can eclipse your government, dude. You want to talk about organized crime? Let's talk about federal governments across the world. It is not just the West. It's almost like governments around the world were governments. They were doing their thing. They weren't exactly altogether evil. And then they run across this thing called organized crime, or the mob, right? You had the Italian mob, you had the Yakuza in Japan, you had all kinds of different mobsters. And I can't remember what the Russian mob is named. But it looks to me like somewhere in the, probably around the 1930s, government started looking at these guys going, instead of trying to arrest them and throw them in jail, which we are not very good at because they're that smart, maybe we should hook up with these dudes and let them teach us how they run their organizations so that we can be as effective as they are, because we can't even, they couldn't even put Al Capone in jail on anything other than tax evasion. It was tax charges. is what got Al Capone. They didn't get him on murder. They didn't get him on racketeering. They didn't get him on criminal intent to convey alcoholic beverages across country lines. No. They had to go with tax charges. He didn't pay his taxes. And then I think he actually ended up dying of syphilis while in prison. It doesn't matter. It seems clear to me that federal governments across the world hooked up with organized crime after they figured out that they weren't ever really going to be able to do anything about them. And that's why we live in the world we live in today. Because the French central bank's deficit, well, it may be great for Bitcoin, according to Arthur Hayes. Cointelegraph's Zoltan Vardai is writing, the ballooning financial debt, or deficit, of France's central bank. The central bank has a financial deficit. It may spur a new wave of money printing, potentially unlocking billions in new capital for Bitcoin. France's central bank, the Banque de France, reported a net loss of 7.7 billion euros for the fiscal year 2024, mainly driven by negative net interest rate income due to high interest payments, according to a press release published in March. Yes, a net negative due to high interest payments is coming to a government run by organized crime near you. Now, I guess I should say, if the governments around the world had really adhered to what they had learned from organized crime, honestly, they probably wouldn't even be here. We probably wouldn't even be in this situation. Oh, wait a minute. That's right. They're basically just stealing from the citizenry to pad their own pockets. So the governments are actually fine, or the people that work for them, but it's the citizenry that's going to, be bent over the table. Anyway, this brought France's government deficit to over 186 billion euros. That's 176 billion US dollars in 2024, representing an entire 5.8% of the country's gross domestic product. Ladies and gentlemen, this is embarrassing, honestly. It significantly exceeds the European Union's 3% limit. Wow. So they are completely out of line with the EU. Anyway, France's central bank is now among the bloc's worst performers, with the shortfall signaling capital outflows from the country. Arthur Hayes, co-founder of BitMEX, believes that France's financial deficit may catalyze trillions of euros of money printing by the European Central Bank, signaling fresh liquidity flowing into Bitcoin. Quote, French capital, French, not fresh, but French capital is leaving France. Who would have guessed? And if you take a look at the gross change of any other member, it's the worst. The real threat is French capital leaving for Germans and Japanese investing in their home markets because the U.S. is changing the world order, Hayes told Cointelegraph. Quote, this is what predicates the ECB to print now or print later in the trillions of euros, and that's the aggregate size. It's another great thing for crypto, he says. Around 60% of French bonds and debt are owed by foreign entities, with Germany and Japan being the two largest bondholders. But with reduced U.S. investment, German and Japanese capital that previously financed France's budget, it's no longer flowing in. Quote, my thesis is basically the ECB prints now or they print later, and in both cases, they lose control because in both cases, the people would rather either default, redenominate, do capital controls, print the money, and have their way of life, end quote. According to Hayes, the ECB could either print later to try to save the European banking system or print now to enable French spending. There's just no other option. France's growing fiscal deficit may prompt the ECB to pivot to quantitative easing, oh joy, which refers to central banks buying bonds and pumping money into the economy to encourage spending in the face of stagnating economic conditions. In 2022, Bitcoin benefited from the QE announcements from some of the world's largest banks, like The U.S. Federal Reserve. Bitcoin's price, they do the whole price analysis thing at the very end of this. We don't need that. What we need to know is that France and their central bank is outstripping the EU by leaps and bounds in just how poorly their economy is being managed. We knew France was in trouble, but holy crap, France has got real problems. And if Japan and Germany, and by the way, they ain't the only ones involved in investing in quote unquote France, if they pull out, and Germany, honestly, it is in Japan and Germany's best interest at this point to stop funding the clown show in France and start building things at home. Japanese money for Japanese people, German money for German people. I don't know. Maybe I'm just a Nazi. Who knows? Anyway, let's get to Pavel Durov, who says, I funded my lifestyle from Bitcoin, not Telegram. Martin Young, Cointelegraph again. Messaging app Telegram founder and CEO Pavel Durov says he invested in Bitcoin when the cryptocurrency was in its infancy and has since used his holdings to fund his lifestyle. Quote, I was a big believer in Bitcoin since more or less the start of it. I got to buy my first few thousand Bitcoin in 2013, and I didn't care much. The Russian tech entrepreneur said on Lex Friedman's podcast on Tuesday. He added that he bought at the local maximum, which was about $700 per Bitcoin, and I just threw a couple of $1 million there. A few people ridiculed him when the price went down after Bitcoin tanked below 200 in the bear market that followed, but he told them, I don't care. I'm not going to sell it. I believe in this thing. I think this is the way money should work. Nobody can confiscate your Bitcoin from you. Nobody can censor you for political reasons, end quote. Durov said that he has used his Bitcoin investment to fund his lifestyle. Quote, some people think if I'm able to rent nice locations or fly private jets, it's because I somehow extract money from Telegram. Like I said, Telegram is a money-losing operation for me, personally. Bitcoin is something that allowed me to stay afloat, end quote. He predicted that it will come to a point when Bitcoin is worth $1 million due to governments printing money like, well, there's no tomorrow. Nobody's printing Bitcoin, he said. Bitcoin is here to stay. All the fiat currencies remain to be seen. Yes, that he's talking. The further existence of fiat currencies does indeed remain to be seen. Durov, who was arrested a year ago in France, charged with facilitating crimes committed by Telegram users, also discussed the Telegram Open Network, which it developed in 2018 and 2019 to provide a blockchain for the messenger service. He added that Bitcoin and shitcoin number one were not scalable enough to cope with the load that our hundreds of millions of users would create. End quote. The key innovation was inherently scalable through shard chains. Oh, I haven't heard that one in a while. Shard chains, he said. However, despite successfully developing the technology, Telegram couldn't launch it due to regulatory restrictions in the US. The project, which is now called the Open Network, is deeply embedded in the Telegram ecosystem and has gained momentum for non-fungible tokens. Quote, TON has become, I think, the largest or the second largest blockchain in terms of daily NFT trading volumes. Well, good for you, Pavel. The network's native token, Toncoin, hit an all-time high of $8.25 in mid-2024 and has since fallen more than 67% from that level, just like a good shitcoin should. Yeah, it's trading just like a shitcoin. So Telegram loses money for, well, it loses Pavel Durov money personally. This I didn't really know. I guess I'd heard rumors, but here he is admitting that for him, Telegram is just loses the money. And all of his wealth that we see has come on the back of, well, him buying Bitcoin in the early days. So good for him. But what's interesting is that he's singing the praises here yet again, and he's sung the praises of Bitcoin on several times. which is why I never understood why he developed Toncoin. Dude, just use Bitcoin. I don't understand. I dropped on my head at birth, I guess. But Coinbase tops $1 billion in Bitcoin-backed on-chain loans via Morpho. Again, what could possibly go wrong? James Hunt, The Block. Coinbase surpassed $1 billion worth of Bitcoin-backed on-chain loan originations on Tuesday, just 8 months after the service launched in January. Quote, next goal? $100 billion in on-chain borrow originations. Coinbase CEO Brian Armstrong posted on X. Quote, these adoption charts are what every product manager wants to see. Hockey stick growth. The on-chain economy is thriving, end quote. Powered by DeFi protocol Morpho, a Coinbase Ventures portfolio project. The crypto exchange originally offered borrowers up to $100,000 in USDC, that's Circle stablecoin, using their Bitcoin holdings on Coinbase as collateral without having to sell the underlying asset and incur a taxable event. Quote, the integration of Bitcoin-backed loans on Coinbase is TradFi in the front, DeFi in the back, Coinbase VP of Product Max Brandsburg said at the time. That's a mullet of economic activity right there, ladies and gentlemen. By April, this limit had been lifted to $1 million after generating $130 million in originations in just the first few months, with plans to increase it further. Quote, the on-chain economy is growing and we're growing with it. Coinbase posted on X on Tuesday. Quote, loan limits are increasing. Get up to $5 million in USDC against your Bitcoin. Rolling out soon, end quote. Coinbase previously offered a Bitcoin-backed loan program for retail customers, but that was sunset in November of 2023 amid a legal battle with our friends at the SEC under the Biden administration. However, with this revamped service, Coinbase simply provides an interface to access Morpho on its Ethereum Layer 2 base protocol, but does not directly manage the loans itself. Oh, yeah, okay, I see how this is working. When a Coinbase customer opts for an on-chain loan, their Bitcoin collateral is converted one-to-one into Coinbase-wrapped Bitcoin, or CBBTC, with no fee, and then it's transferred to Morpho. The DeFi protocol then disperses the USDC loan to the customer's Coinbase account. Loans must be over-collateralized with at least 133% collateral ratio, though borrowers can select any higher loan-to-value level that they prefer. If the loan balance climbs to 86% of the collateral's market value, the position is fully liquidated to repay the debt and then cover a penalty fee. Again, what could possibly go wrong? Interest rates adjust automatically with each block on base, while repayment remains flexible with no minimums or deadlines, provided users maintain a healthy LTV. Okay, let's just take a breath on that. You got a 15-year, or let's take it. I think there's a 10-year fixed mortgage in the United States. There's a 15-year fixed mortgage rate in the United States. And then there's a 30-year fixed mortgage rate. Now, all the people that got flexible or adjustable rate mortgages, or ARMs, and that's what they were getting pre-2008. And we know what the outcome of having variable interest rates on the housing market was, because we can just go look at The Big Short and watch that movie, or go watch the movie Margin Call if you want to find out what the hell happened during that time. Those two movies together, watch them multiple times, not just once each. I'm telling you, they're great movies. They're really fun to watch, but they really do a good job in trying to line out exactly what the hell happened preceding 2008 and then into the collapse after 2008 and into 2009. So what did we just read here? Interest rates adjust automatically with every block on the base protocol. That is a terrifying situation. That should terrify the living crap out of anybody that wants to have anything to do with this particular product. I would run, not walk, as far away from this lending product as I possibly could. If you need to take a loan with your Bitcoin, go to somebody like Unchained. They're in Austin, Texas. They are not steaming piles of crap that Brian Armstrong has become. This product right here is a dangerous product, and they just skip over it in this the block story. Remember what I'm saying. This product has variable interest rates that adjust automatically with every passing block on the base blockchain. And your Bitcoin is at risk every passing block. I'm just saying, guys, be careful. While Bitcoin is currently the only collateral option for the on-chain loan service, Coinbase previously said that it aims to support shitcoins in the future, and the service is currently available to U.S. U.S. users, excluding, can you guess who? Who would be excluded from using any kind of product that has anything to do with Bitcoin or cryptocurrency in the United States? That would be the residents of New York because of the bit license. Earlier in September, Coinbase rolled out a new feature allowing users to lend their USDC on-chain, offering yields of up to 10.8%. Again, probably you need to stay away from that son bitch as well. Let's go to Wisconsin, the land of cheese. Wisconsin passes pro-crypto law, exemptions for mining, staking, and business. Sounds pretty cheesy to me. Atlas 21 has it. Wisconsin lawmakers are working to transform the state into a more favorable territory for digital assets, and a new bill could ease regulatory burdens for companies and individuals operating in the digital asset sector. Assembly Bill 471, introduced by Republican members of the Wisconsin Assembly and assigned to the Committee on Financial Institutions, seeks to exempt certain digital asset activities from the requirement to obtain licensure as money transmission services. If approved, the measure would make it easier to accept cryptocurrency payments, develop blockchain software, conduct mining operations, or stake tokens without needing specific state authorizations. The bill exempts a range of digital asset-related activities from licensing requirements, including mining, staking, and direct exchange between digital assets that do not involve conversion to fiat currency. Oh, well, that would be nice. Additionally, the proposed legislation introduces a securities exemption for third-party providers offering technical staking services, provided that the rewards distributed consist solely of those generated by the blockchain network itself. The initiative aims to make Wisconsin a less cheesy jurisdiction for crypto entrepreneurs. Despite this vision, state Democrats have introduced bills requiring stricter oversight of Bitcoin ATMs, citing their role in facilitating scams. A bill filed in July in the Assembly by Democratic lawmakers requires all Bitcoin ATMs operating in the state to obtain a license, and yada, yada, yada. Really don't need much more than that. So Wisconsin is trying, and we'll see how it goes. Because, honestly, we're not doing too terribly well on these Bitcoin bills in all these state legislatures. I think there's more that have failed, been vetoed, or voted down than have actually become law in all these respective states. Well, let's run the numbers. CNBC Futures and Commodities says the government is now shut down. Apparently it shut down at midnight. I kind of knew about this morning, but, might as well remind you, if you're in the United States, ladies and gentlemen, your government is shut down. I see memes that's being spread around that says things like, all other governments in the world, and it shows, laughing at the U.S. and shows this dude laughing. And I'm like, you mean like the UK that's about to give you a digital ID whether you want it or not, even though nobody really wants this thing? That's what a functioning government does. Personally, I like the U.S. government being shut down because the less they can touch is the less they screw up, like energy, which is down across the board, except, of course, for natural gas because of a deal that got worked out with Trump and I believe the UK. Anyway, Merbon crude is down a point to 67.51. Brent North Sea down a point to 65.38. West Texas Intermediate, my homeland oil, is down a point to 61.76. But then we have natural gas, which is up almost 5 full points today, back up to 3.46. The deal that's been struck is something like 20 million pounds or 20 million tons, or I don't know. The UK is going to have to buy a shit ton of natural gas, and they're going to be buying it from the United States, given a deal that Trump has made. Why would they have to buy it from us? Because the nasty Russians and their nasty natural gas, because they're attacking Ukraine. So they're basically going to pay through the nose to have natural gas shipped to them when they've got natural gas fields aplenty just off the north shore of that tiny island nation. But no. The greenies refuse to have anything to do with that energy. So they'll buy ours, which is fine. I don't mind selling them the natural gas that the companies I'm involved with produces. In fact, I wish I could sell it to them at $12 per 1,000 cubic feet. Gasoline is down 1.81% to $1.88 a gallon. Good luck finding it. Shiny metal rocks are mixed today. Gold is up a half point to yet another all-time high, $3,892. Platinum is down over a point. Silver is up over 2 points. And copper is up a half point, while palladium is the biggest loser, 1.16% to the downside. Ag is mostly in the red today. I got the biggest loser is going to be sugar. Yep, sugar is down 2.7%. Soybeans are up 0.5%, and that is not the biggest winner. Coffee is 2.57% to the upside. I bring soybeans up because there is major stuff going on in the United States soybean market. We somehow or another are responsible for sending a whole bunch of soybeans to Argentina, who in turn is selling it to China. And honestly, we're really not going to know what the hell happened. Why? Because the government shutdowns, you know when they happen? If you go back in history and you look at all the government shutdowns over the last, 20 years, they all happen around harvest time for ag producers. Specifically, everything gets harvested around this time anyway, but grain. We can do all kinds of weird, technically illegal shit with grain as far as the United States government is concerned when nobody's watching, because nobody's keeping any records at all right now on who's getting what in grain because of the government shutdown, which just happens to coincide with, harvest. Yay. You're a mafia government at work there. I got livestock is pretty much in the red today. Live cattle down 0.15%. Lean hogs down almost 2%. Feeder cattle down a third. S&P is up a quarter point. NASDAQ is up a quarter point. Dow is basically sideways, as is the S&P Mini, only slightly in the red. $116,900 gives us a $2.33 trillion market cap, and we can now get over 30 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,928,719.92 of. And average fees per block are low, 0.02 BTC taken in fees on a per block basis. There looks to be about 50 blocks carrying 139,000 unconfirmed transactions waiting to clear at high priority rates of 2 Satoshis per VByte. Low priority will get you in at 1. And zettahash is holding 1.06 zettahashes per second is the hash rate of the Bitcoin network, which provides us all of our nice, beefy ass security. From the last couple of episodes, if you did not listen to yesterday's episode, it's a 2.5 hour long interview I did with a dairyman by the name of J.R. Burdick. Go listen to it. There's some serious agricultural history as to why we find ourselves with $29 a pound ribeye from frickin' Costco. It started 30 years ago, and it's surprising that almost none of us understand how this works. We get into a lot of how fiat currency has destroyed American agriculture on almost every level it can be destroyed. If you want to find out what the hell's going on in agriculture, go listen to Bitcoin and J.R. Burdick. That was the title of yesterday's episode. And from that episode, Pies with 121 sat says, thank you, gentlemen. No, thank you. Bitcoin for President with 500 says, love the show. Well done, sir. I wish I had more to give. Maybe you've given enough. If it hurt to give it, well, then you probably gave enough, and I appreciate every Satoshi. Paul Cernine with 500 says, thank you for another insightful episode and the words of calm and wisdom regarding the knots versus core discussion. This perspective is exactly what's needed right now. Keep up the good work. Thank you. I appreciate that. Koala with 109 says, great effing episode. DK Black Sheep with 5,000 sats. Woo! Good morning from a Danish fan of your show. I like Danish too. Nice and fluffy, a little bit of cream cheese on it. Good. Wartime with 133 says, I think it's Nazis versus cornholios. Also, corpoists? Corpoists. Wartime with another 133 says, cheers. And that's the weather report. Welcome to part 2 of the news that you can use. SEC crypto policy, where Chairman Atkins is vague on wallet rules. This is out of Frank Corva, writing for Bitcoin Magazine. Today, in a media scrum after his opening remarks at the SEC CFTC Roundtable on Regulatory Harmonization Efforts, U.S. Securities and Exchange Commission Chairman Paul Atkins expressed his excitement. He's excited regarding bringing tokenized securities on chain, though he didn't really offer any insight into what platforms or protocols these assets might trade on. The latter may be particularly important to Bitcoin enthusiasts, of which I am. I'm somewhat of a Bitcoin enthusiast myself, because the wallets that you use to trade tokenized securities on chain will likely require identifying information, and such a rule could spill over to Bitcoin wallets. It ain't spilling over to mine. So I asked the chairman what securities coming on chain looked like to him. Would it look like gated platforms like Fidelity and Charles Schwab employing blockchain to settle transactions on the back end? Or would it look more like tokenized stocks trading on decentralized exchanges? He did not respond to my questions directly. He instead first shared how securities trading on blockchains can reduce settlement time. Deflecting much? Quote, the great thing about tokens is that you can have payment and exchange of the actual asset online at the same time. It's T0, basically instantaneous clearance, Chairman Atkins told me. And he followed up this statement with some mildly concerning language. Quote, so maybe we'll have to even build in like a speed bump to make sure that we don't have any mistakes or wire money to the wrong place. We will be working realistically for the next year or two to try to get where we have good guardrails around the system, the chairman added. Words like speed bump and guardrails triggered alarm bells, as they indicate some form of control, and where there's control, there's often KYC. If tokenized securities end up trading within the walled gardens of traditional brokerages, then the issue of KYC isn't so concerning, as these platforms already KYC all of their customers. The issue becomes more critical if tokenized securities can be traded through protocols like Uniswap via wallets like MetaMask and Trust Wallet, which would then likely be required to KYC their customers. If this happens, it begs the following questions. Will this lead to all crypto wallets having to KYC their users? Will this rule eventually bleed over into Bitcoin-only wallets? Based on my interactions with the chairman, I got the impression that he doesn't currently have the answer to these questions. It is, or rather, that is, he wasn't being evasive as much as he genuinely didn't seem to know exactly what the broader picture around tokenized securities looks like right now, as he's waiting for Congress to act. Much regarding crypto market regulation hangs in the balance as the Senate discusses and revises the Clarity Act, the Digital Assets Market Structure Bill. The chairman stated that he's paying attention to Clarity as it works its way through the legislative process. Quote, "There's the Market Structure Act that cleared the House and is now being discussed in the Senate. We'll see what happens," end quote. In the meantime, if you want to protect your right to use your Bitcoin wallet privately and permissionlessly, be sure to contact your elected officials as part of the Satoshi Needs You campaign. And if you don't know what that is, you got to go back to Monday's show where I read you Frank Corva's piece entitled Satoshi Needs You. And he does. I mean, there's a lot of us that are very cynical about calling our senators and state reps and all that kind of stuff. And while I don't necessarily blame anybody for being skeptical about doing such a thing, because do you feel like you're being served by your senator or representative? Probably not. However, whenever it is that you call, they, by law, have to take down your opinion. And those opinions are, generally speaking, written into a style of report that is easily viewable by whoever office you called. So their lackeys will put together a presentation of all that day's calls, and then they'll like meet them out to where this guy, these people called in here, and this is what their sentiment is, and here. And then it's all boiled down, and then it probably gets into a one-page format that the senator or the representative themselves, or at least their most trusted chief of staff or somebody like that, reads and basically tells them what the hell's going on. And, you know, we get enough people to call our state reps and all that kind of stuff, and we all say, no, you're not going to be KYC my Bitcoin only wallet. But here is what is going to happen. If you're not Bitcoin only, if you've got a ledger, if you're using MetaMask, whatever, if you're using, God forbid, the Brave wallet on the Brave browser. I love the browser. I hate the shit coinery. It doesn't really matter because it is my go-to browser. It is very good. I very much appreciate the ad blocking, but I don't appreciate the shit coinery. They're going to KYC AML you like nobody's business. It's going to happen. The only thing that we have, the only thing that we ever really had, and the only thing that we will have into the future is a good, solid Bitcoin-only wallet, which, if for whatever reason you still own shitcoins, stop it, because it's going to get you into trouble. Because what's going to happen is you're inevitably going to keep those shitcoins on the same wallet, like a Ledger or a Trezor or something like that, along with your Bitcoin, and they're going to AML KYC the whole thing. The whole thing. Because Trezor and Ledger are, I guarantee you, they are salivating at being able to hold tokenized securities and equities on their wallets. They want you to be able to hold NVIDIA stock as a tokenized asset on the ledger. They want that. And they are going to comply with any AML KYC shit so that they can get there. It's going to happen. It is not a question of if, it is a question of when. And if your Bitcoin is on there, it's going to be automatically KYC'd too. You have to get your Bitcoin onto something like a cold card wallet. And please understand this. Your Bitcoin is never really on your wallet. Your wallet isn't really a wallet. It's a signing device. It's how you vector the Bitcoin that's under your control, which lives on the blockchain. That's what your wallet does. It doesn't actually contain any Bitcoin. The files aren't actually in the computer. It's just saying. Bitcoin only wallet is your only hope out of this. Sell your shit coins, buy Bitcoin, then buy a cold card and put everything there, right? Let that be your vectoring device. Because I doubt very seriously that I doubt seriously that Novak would stay in business producing hardware wallets. He'd probably go find something else to go do and make money at, because he can figure out how to do that just fine without making hardware wallets anymore. If it got to the point where the United States and Canadian governments got on his ass and said, you will start producing CoinKite cold card wallets with KYC AML, he'd be like, fuck you, I'm going to go do something else. All this software is already released. He actually has already provided all the plans to build your own cold card wallet if you want to. We don't need to comply with this. But if you're using a Ledger and a Trezor, you will be forced to comply with this. And the only reason that you should be using that is if you're a shitcoiner. And I've already told you, don't do that. Moving on to BlackRock. IBIT overtakes Deribit as world's largest Bitcoin options venue. Not ETF, options venue. It's now BlackRock's IBIT is now being looked at as an exchange in a way. Bitcoin News, Alex Larry. BlackRock's iShares Bitcoin Trust has officially become the biggest Bitcoin options venue, surpassing Deribit. This is a big deal for the world of Bitcoin derivatives, as Wall Street's influence is now clearly extending into the area. According to Bloomberg, open interest in options on IBIT hit nearly $38 billion after the last contract expiry. Deribit was then at about $32 billion. That's a huge jump, considering IBIT only launched options trading in November of 2024, and Deribit has been the go-to exchange for Bitcoin derivatives since 2016. 2016. IBIT's growth has been historic, meteoric. By mid-2024, the ETF had already reached $70 billion in assets under management. A month later, IBIT passed $80 billion in assets under management, breaking speed records compared to older giants like Spider Gold Shares or Vanguard's S&P 500 ETF, which took years to hit the same marks. Today, IBIT manages around $87 billion and has become the largest Bitcoin ETF in the world. The rapid growth of IBIT is part of a bigger story. The shift of Bitcoin trading from offshore hubs to regulated United States-based markets. And for years, platforms like Deribit thrived on leverage and high-risk trading, becoming the main hub for Bitcoin options. But that dominance is now being challenged by Wall Street-backed products like IBIT, which have regulation, have credibility, and have massive institutional capital involved. This is a big deal, as IBIT has created a feedback loop where more liquidity attracts more inflows, strengthening its position even more. George Mandres, senior trader at XBTO Trading, told Bloomberg that Wall Street's involvement is changing Bitcoin markets. The involvement of traditional finance, he said, brings substantial capital and trading expertise, which means tighter spreads, deeper liquidity, and more efficiency. Mandres even thinks that the presence of big institutions will reduce the extremes of Bitcoin's famous price swings, the volatility of volatility, as he calls it. Despite being surpassed, Deribit is still a major player in the market. It was acquired by Coinbase for $2.9 billion in August of 2024. The platform is still attracting Bitcoin native traders who prefer offshore, flexible environments. Analysts believe IBIT's rise hasn't hurt Deribit. Instead, it has created new opportunities. IBIT's US-based products have opened the door for retail investors and institutions that were previously unable or unwilling to access Deribit. And it's worth noting that this situation has also created arbitrage opportunities and has improved risk management. This is what many see as the future: two parallel ecosystems. One will be around regulated products like IBIT for institutional investors and U.S. retail traders who want compliance and oversight and mommy to change their diapers. The other will be offshore for those who want higher risk, more leverage, and experimental financial products so that they can have face-ripping depression like 100x leverage on BitMEX, back in the day. So there you go. On to Kentucky, where a state senator is being sued over a Bitcoin mining business. Simon Chandler from Decrypt. Kentucky Senator Brandon Smith, from Hazard County, Kentucky, is facing two separate legal cases related to Bitcoin mining repair business that he founded in Letcher County, Kentucky. Smith is the CEO and co-founder of Mohawk Energy, which in 2022 pivoted from coal cleanup operations to ASIC repair operations and other Bitcoin mining services. Wow. Going from cleaning up old coal mines to repairing computer equipment is quite the jump. Local outlet Lexington Herald Leader reports that Ricky Dale Cole sued Smith in Letcher Circuit Court in January, accusing the lawmaker of misrepresenting the value of Mohawk Energy. Cole claims that he sold a warehouse to Mohawk, agreeing with Smith to sell the premises below market price in return for a 20% stake in the business. Oh, there you go. There you go. Yet Cole's suit alleges that the company has refused to share info about its finances and that he has not profited from the deal. He also alleged that Smith made false promises and representations. This suit comes in addition to a different case filed in November of 2023 by Huobi subsidiary HBT Power. And they allege a breach of contract and misrepresentation following an agreement with Mohawk Energy in June of 2022. Now, according to those allegations, Smith had made a deal to work with HBT Power employees to train his own workers and acquire the in-house ability to repair Bitcoin mining machines. However, Smith and other Mohawk representatives eventually asked HBT Power personnel to leave Mohawk's premises, with HBT Power claiming that Smith did not own the warehouse at the time he entered into a contract with the Chinese company. Smith has denied these allegations against him and has filed counterclaims against both plaintiffs. Despite the legal difficulties surrounding Mohawk's pivot to crypto, Smith remains optimistic about the industry's future in the United States and Kentucky. Smith had been instrumental in securing the passage of several crypto-related bills in Kentucky, including a 2021 bill which he authored that provided tax incentives for investments in cryptocurrency mining. Speaking to Decrypt, in his capacity as Mohawk Energy CEO, Smith said that the company is excited to return to its mission of job creation and trading once the litigation is over. While it is unfortunate that Huobi and its shell subsidiary HBT Power breached their 8-year contract and refused to start operating at the Mohawk plant, that does not impact Mohawk's long-term plans to bring more jobs and more technology training to the region. Our countersuits to the complaints explain our position, end quote. Mohawk's difficult pivot came during a period when the U.S. cryptocurrency mining sector witnessed rapid expansion, with Bitcoin mining sites in the U.S. increasing in number by 23% between the years 2022 and 2024 to 48 Bitcoin mining sites. And according to Shannon Squires, the chief mining officer, We have a chief mining officer as part of the C-suite now, ladies and gentlemen. Chief mining officer Sharon Squires at Compass Mining said that such growth has continued this year, as evidenced by Bitcoin's hash rate reaching new all-time highs recently. Quote, in the U.S., the momentum, especially visible in states like Texas and Wyoming, the expansion seems to be mostly coming from existing companies rather than new players entering the market. While affirming that the American cryptocurrency, or rather crypto mining industry, has become increasingly professionalized in recent years, there's still some degree of variability, with some endeavors popping up and fading quicker than others. She added, quote, while Bitcoin mining is no longer the Wild West it once was, companies still need to do their homework and work with established partners that have proven themselves through multiple cycles. Yeah, that's actually probably damn good advice. I want to go back up to this one just for a sec. Cole's suit alleges the company refused to share info about its finances. Stop right there. That's your fault. You should have seen the finance documents before you ever handed over the money. That's your issue. I mean, I don't care if Smith from Mohawk Energy and Smith, the senator, is a scumbag, Dukes of Hazzard level villain. I don't care. If you entered into an agreement, and I'm not saying that this Cole guy might not win. I'm just saying, if you're dumb enough to pay money to take a supposed 20% stake in the company because you're going to sell something to that company at a lower rate, and you don't look at the financial statements, you don't require that on the table so that you and your accountant can go through it with a fine-tooth comb, that's your fault. You should have looked at that before, not after you cut the fucking check. I don't know how stupid people are these days, but that's just dumb. Last one for the day. Templar launches native Bitcoin lending without intermediaries. Again, subtitle, what could possibly go wrong? Vivek Sen, writing for Bitcoin Magazine, in a significant development for Bitcoin holders. Templar Protocol has announced the launch of its mainnet, introducing the first, quote, cipher lending protocol that enables users to borrow US dollar stablecoins against their native Bitcoin without any intermediaries. The launch comes at a time when institutional custody solutions are controlling an increasing share of the Bitcoin supply, with Coinbase alone holding 10% of the circulating Bitcoin. The protocol, which has already secured $100 million in lending commitments, combines decentralized multi-party computation, or MPC, network technology with immutable smart contracts to ensure user collateral remains secure and free from unauthorized intervention. This launch marks a departure from traditional centralized lending platforms and wrapped token solutions that have dominated Bitcoin lending. Quote, the institutions have arrived, and they're hoovering up BTC using centralized custody of companies like Coinbase, notes Royal F001, I think. Royal Fool. It's in lead speak, because yes, that's what I want from my CEO is lead speak in their last name. Royal Fool, Templar Protocol pseudonymous founder, quote, with Templar, you send your BTC to an immutable smart contract running on a P2P network, which then sends you stablecoins, end quote. The protocol introduces several key innovations, oh joy, including permissionless access without KYC requirements, open source architecture with no administrative backdoors, how do we know, and privacy first design, suit speak. That's privacy first design is suit speak. Just saying. At launch, Templar supports native assets across Bitcoin and other chains. The technical architecture employs a decentralized MPC network for securing Bitcoin deposits, while smart contracts manage collateralization and repayment processes automagically. This removes the need for traditional custodians while maintaining security and efficiency. Quote, Bitcoin was created to replace banks, not to be a novel toy asset for Wall Street to financialize and control, says Royal Fool. Templar restores Bitcoin to its proper place as a permissionless, censorship-resistant asset in the context of borrowing and lending, end quote. While shitcoin number one, DeFi ecosystem has flourished, Bitcoin lending has remained largely centralized. Templar's solution aims to change this dynamic by providing a decentralized lending option for Bitcoin holders. The protocol's roadmap includes implementing additional privacy features such as differential privacy and zero knowledge protections against predatory liquidations. Templar is also being integrated with various prime brokers and wallet providers to expand its accessibility. This development comes at a crucial time in the Bitcoin market as demand for decentralized financial services continues to grow. Templar's approach of enabling native asset lending without wrapping or bridging could set a new standard for cross-chain DeFi interactions. The Templar mainnet is now live and accessible through their website with documentation and support available through their official channels. The team emphasizes their commitment to expanding the protocol's capabilities while maintaining its core principles of permissionless access and user sovereignty. I'm worried that I'm not getting a lot of information out of this news story. I don't want to see what happened with BlockFi happen again. And we seem to have learned nothing from the FTX, Alameda, BlockFi, whatever else it was, the algorithmic stablecoin, I can't remember the name of it, that whole mess. And BlockFi was right in the middle of it. And a whole bunch of people that had loans against their Bitcoin got their Bitcoin liquidated, even if they weren't in danger of being liquidated under normal circumstances. You know, normal circumstances like Sam Bankman-Fried not stealing everybody's money and making a giant mess of things. Now, they would have been fine. They would have been able to pay the loan. But no, BlockFi was doing dirty dealings with all these other assholes on the other end, and they all went belly up together. And the people that had their Bitcoin in this protocol or this platform named BlockFi, they all got hosed. All got hosed. I just don't want to see it happen again. And it looks like we're not learning from our past. It looks like we're not learning from our mistakes. And if we can't do that, we're going to have more problems. Then, God forbid, we don't need any more problems. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.